Hello friends, this YouTube channel Learn Finance and Accounts. This is dedicated to the efforts put in by teachers and students in teaching and learning finance and accounts. In this channel we will be discussing different aspects of these subjects in detail. Please watch the complete video, like, share and subscribe to the channel. So we will be talking about various aspects of finance and accounts. First, we will be starting with accounts. And the topic that we'll be starting first is topic number one, meaning and definition of accounts. Okay, so you have heard about this quite often. What is accounting? So, students who are studying accounting, the first question that they have to learn, the first topic that they have to learn is what is accounting. When we speak about the meaning and definition of accounting, we generally use this definition that accounting is an art and science of identifying, recording, classifying, summarizing, interpreting, and reporting of financial data. So long definition. So to learn about this definition, to know about this definition, what is accounting? Let us first break down this definition into different terms. Okay, what is the first term? Art and science. Art and science. So, what is an art and what is a science? So, you must have heard those who have some science background or they have done science in junior classes. So, they must be knowing that science is a system. It has a system, it has some principles, it has some rules and regulations, according to which some theories are made, like say Newton's law. First law, second law, third law, every action has equal and opposite reaction, theory of inertia. So these are the rules and regulations, and anyone can try these rules and regulations. For example, if a person wants to know about every action has equal and opposite action in place A, then also the result will be same. In place B, then also result will be the same. The person can try to join two molecules of hydrogen and oxygen. It will give water at place A also, at place B also. Any person can do this. So it is irrespective of the person involved. So science is not dependent upon the person, it is dependent upon rules and regulations. Some principles are there. Similarly, accounting also has some principles. What kind of principles? See, you must have heard in accountants make a balance sheet. Accountant makes income statements like profit and loss or trading account. So now this balance sheet, now this income statements are made according to some rules and regulations. Debit rules, credit rules. We'll talk about these in the coming topics. So there are some rules. On the left hand side, we have to write debit. On the right hand side, we have to write credit. So this is a formula. When you subtract this from this, then you get this. So these are some rules and regulations. So accounts also has some rules and regulations. Accounts is a science. It is an art also. What is an art? Art requires skills like the art of drawing, painting, or singing a song. It requires some skills, some knowledge is required, and it also depends upon the experience of the person. Similarly, accounts also require some skills, some knowledge. Accountants need to have some skills of making a balance sheet, skills of making transactions, writing transactions. So we can say that accounts is a science, it is an art. Okay, let us go to the second part of the definition. It says identifying. What do we identify? Okay, we need to identify a transaction. We need to identify a transaction. So what kind of transaction do we have in accounting? We can have different transactions. Suppose A sells goods to B and B makes payment, then this is a transaction. Mother makes food for her children, this is a transaction. But in case of the first transaction, it involves money. So that transaction is financial in nature. Second transaction is also there, but it does not involve money. Mother is making food for her children. So this transaction is not involving money. So we will not study this transaction in accounting. Had in case of mother, had there been a chef or a hotel or a restaurant which is preparing food and serving food to the guest and charging them, asking them for money, then that transaction would be financial in nature. So we have to identify the transaction whether it is financial in nature or not. And we will be studying only those transactions which involve money. The second thing is type of accounts which are involved in those transactions. A sells goods to B and gets cash. What type of accounts can be there? So, say goods are there, cash is there, and if the transaction is on credit, then B's account is also there. So these type of accounts have to be identified. We'll be doing this in the coming topics, identification of accounts. So that the two things in identifying accounts is that the first, the transaction should be financial in nature, and we have to identify the accounts involved in those transactions. And this identification is generally done through vouchers. Voucher is simply an instrument on the basis of which a transaction is done. So if a person goes to a bank to deposit money in his account, what does he do? He fills the deposit slip, and along with the deposit slip, he hands over cash to the cashier. Cashier takes the cash and on the basis of the deposit slip makes an entry in his computer. So identification was done through voucher. Identification of what? Identification of the account number, identification of the name of the person, and here the deposit slip becomes a voucher. On the basis of the voucher, the transaction is done. Suppose another person goes to a bank to withdraw cash. He gives a check. That check is a voucher now. Earlier the deposit slip was a voucher. Now a check is a voucher. So voucher is any instrument on the basis of which a transaction is done. So this was the second term. Now we come to the third term, which is recording. Now recording of financial transaction is done through in a journal, in a book. The name of that book is a journal. So journal is a word which is derived from French language, like jour, jour, as we say in French, bonjour, have a nice day. Similarly, journal is all the transactions that we write in a book known as journal. That book is called journal, and there in that book we write all the transactions which happened in the day. So we can say, in as in a bank, there is a day book where all the transactions are written for the day. So recording is done in a journal. Now recording also has a process. We'll be learning about that process in the coming topic. Recording in a journal, we'll be doing that. So here at this point, you have to know that accounting, the meaning and definition of accounting, there is a third technical term which is recording, and recording is done in a book called journal. Fourth is classification. Classification of financial transaction is done in another book which is called ledger. Now why two books? Earlier there was journal and now there is a ledger. So we have to write the transaction in a journal, then we have to classify the transaction in a ledger. So what is writing and classification? Why are they two different? See, writing, we are writing all the transactions. Suppose we are writing a transaction which involves cash, we are writing another transaction which does not involve cash, third transaction which involves cash, fourth does not involve cash. So there are many transactions which involve cash and there are many which does not involve cash. And we want to know what is happening to cash. Is it increasing or decreasing? Increasing or decreasing? After every transaction of cash, it will be increasing or decreasing. So these transactions need to be classified according to their accounts. And that classification is done in a ledger. We'll be learning about a ledger, we'll be learning about a journal also in detail. So at this point, classification, this is the fourth technical term of this definition. Fifth technical term we come to is summarizing. Now, what is summarizing? Summarizing of financial transaction is done in final accounts. What does this mean? See, first we had some voucher, then we made some journal, then we made some ledger. Now comes another type, which is final accounts. These are income statements. Income statements include trading account and profit and loss account. We'll be learning about that also. And income statement also include balance sheet. That is taking out the summary of all the transactions. Suppose there was 10 transactions that we had written in a journal. The 10 transactions was first cash came into the company, then cash went out of the company, then again came, then again came, then went out three times. So so there are suppose 20 transactions of cash. Now we want to know what is the final balance of the cash. When we started with say 1 lakh dollars, $1 million, and now what is remaining? Remaining is $2,000, or remaining becomes $5 million. So that $5 million will be written in the balance sheet. We'll be learning about that also in the coming topic again. So summarizing means taking out the summary of something. Summary, say a paragraph has 15 lines, and you want to know what is the crux of the matter. And you write that paragraph, you take out all the important points and write that in 3 lines. So that means you are taking out the summary of that paragraph. Similarly, in accounts also, we have to take out summary of all the transactions which are happening. So we'll be learning about these in the coming days. Next is interpreting. Now, interpretation of financial transaction is done through ratios. You must have heard about ratios: liquidity ratio, solvency ratio, profitability ratio. There are so many ratios. Earning per share, right? Some ratios are involving cash, some do not involve cash. So we'll be learning about this in detail in another coming topic. Another topic we'll be learning that. So cash flows are also used in interpretation of financial transaction, financial data. Then trends. So this was a sixth important term. Seventh is reporting. What is reporting? Reporting of financial transactions or financial data is done through various websites of business channels, business TV channels like say CNBC or Bloomberg. They tell us about some companies. What the company, what is the profit of the company, what are the assets, what are the liabilities, how much the money they have to take from people, how much money they have to pay, what are their expenses, what are the salaries they are giving. So this is reporting. Reporting is done to all the stakeholders of the company. Stakeholders are those people who are concerned about the company. Who is concerned? Say investors are concerned. If I have purchased shares of some company, I am concerned about that company. I want to know about the profit of that company, profit of that firm, because then only I'll be able to know what I am going to receive as say dividend, my return, the return that I am going to get. So another type of stakeholder can be the employees who are working in the company, because their salaries and bonuses depend upon the profits of the company. They will get salary, but bonus they will get only when the company makes profit. And if the company makes more profit, they will get more bonus. So they are concerned about the profits. They are also concerned about the losses or the expenditure. Another stakeholder can be, say, government. Government also wants to know about the profits of the company because they want to levy taxes. So taxes will be based upon the profits of the organization. If the organization earns more money, then they will have to pay more taxes. So they are also a kind of stakeholder. So reporting of financial data is done through websites, business TV channels, and financial newspapers. And there are so many other methods like say annual general meeting of the company where all the shareholders are called and a meeting takes place. Data of the company is shared. So that is reporting. So all this is done for financial transaction or the financial data. As I had talked about this, that financial data is only those transactions are taken into consideration. We write only those transactions into our books of accounts which are of financial nature, which are financial in nature and which involve money. So we consider only those transactions, right? So this was the definition of accounting, meaning and definition of accounting. Should we go to this again? So let me summarize this. The accounting is the art and science of identification, recording, classification, summarizing, interpreting, and reporting of financial data. So this was about the meaning and definition of accounting. Now, here we end our first video. I hope you liked the video. So please support us so that we can continue making such educational content. In the next video, we are going to discuss about type of accounts. I had promised you that we'll be discussing about types of account according to modern approach. See, I'll just give you a small brief background that there are two approaches to studying accounting. One approach is called traditional approach, which is also known as British approach, and the second approach is called modern approach, which is also known as American approach. So these two approaches give, although they gives the same results, result is the same. Whichever approach you use, result will be the same. But I think I've been teaching accounting for since a very long time, and I from my experience I can tell that students are able to learn modern approach to accounting. They think that this is simpler and easy to understand. So we'll be talking about modern approach in the coming session, in the coming video. So that's all for today from my side. I hope you liked this video. So if you liked, so please like, share, and subscribe to the channel. Press the bell icon. Thank you. We'll meet again.